Hello and welcome to our new exciting webinar organized by Interactive Brokers today. Today the topic is about the Singapore VCC, and we have a wonderful panel that will be introduced very soon with Martin O'Regan. But prior to start, I'd like to do some housekeeping and just to check that the sound is okay. So if some of the attendees can just say in the chat box in the question area that they can listen to me clearly, that would be great. All right, thank you very much. Thank you. I got confirmation for that. Let me move on to the slide of disclosure that I need to present to you. And while I present the slide of disclosure, I just wanted to mention also that a copy of the webinar will follow in a couple of hours after the event. So you will be able to check your inbox and have a copy of the webinar PDF file. And of course, also this webinar is recorded and will be available on our website and also on our partners' website. Well, that's now time for me to leave the discussion to Martin, who will be our coordinator for this webinar.
Thank you, Guillaume. Appreciate the opportunity to participate in this VCC. We've got a great selection of industry players across the ecosystem of a VCC. So all the major players are on the panel today. Maybe just to note as well that we will not be having, the speakers will not be coming on video. Each speaker will be presenting slides and they will speak through those slides. So they'll all have a couple of minutes each to go through their individual sections. We should take a couple of minutes each. We'll probably end up at about 7:40. We leave it open to Q&A. So those participants who would like to ask any questions at the end of the session, feel free to use the chat forum, and we hope to make this a lively discussion at the end of the session as well. So just to set the tone, setting the scene, where are we 1 year on with VCC? So look, it's been a huge success, you know, as we had COVID as well just after launch. So even with COVID, there's been 220 VCCs registered with ACRA, and there's 320 sub-funds. So it's been a really good year. Just as a comparison, when ICAV set up in Dublin in its first year, it had similar numbers and it didn't have COVID. So it's been a really good year. The composition of that 220 is about 20% hedge, about 30% private equity, and then 50% between wealth managers and you know, some private funds and family offices and things like that. But overall, out of those 220 funds, about 40% in total is wealth management as well. So, you know, they're impressive numbers in just 1 year. There are larger names, so the type of names that are involved, there's some larger blue chip names having VCCs in construction. So we'll see some global names using VCC, both in the retail space and the non-retail space. They'll be coming on as well. I guess for everybody concerned on the panel and in the community is, you know, VCC has attracted a lot of new managers in Singapore, and you know, as of 2020, the new licenses in Singapore was the highest in 8 years since the launch of the new regime in Singapore in the new licensing regime. So, you know, it's been very attractive as well. And one of the features of the success is there's a very, you know, with the very open, business-friendly regulator, there's also a strong ecosystem within the community, and those players on the ecosystem are on the panel tonight. So with that, maybe we'll pass it over to Benedict Tan from Simmons, take you through the legal considerations when one is setting up a VCC. So, Benedict, would you be able to talk us through your presentation, please?
Yeah, thanks, Martin. Next slide, Gil. Next slide. Yes, so to kick things off, I thought it would be useful for me to just quickly run through some of the basic but key features of the VCC from a legal perspective, especially for the benefit of those of you who may not yet be very familiar with the vehicle. If you're thinking of and this may be found in the MAS's CIS code. So for those of you who are familiar with the Cayman Islands exempt companies or the SPCs, a lot of these features will sound familiar to you. The VCC essentially is a corporate entity which is specifically designed for use as an investment fund vehicle. The sole purpose of the VCC is to be one or more collective investment scheme, and it should not be used for any other purpose. In terms of structure, it's a very flexible vehicle. It can be used as a standalone. It can be structured as a standalone or umbrella fund with one or more sub-funds. And in the case of standalone fund, it can be structured as a feeder fund or master fund, or both as part of a master feeder structure. With the VCC, you will get similar efficiencies as what you would get with the Cayman SPCs, in the sense that an umbrella VCC with sub-funds can share a single board of directors, and they can also share common service providers like the administrator or the auditor. A VCC will be able to issue shares in different classes with multiple, or rather with different economic and voting rights. A typical VCC will issue, for example, management shares, which confer the holder voting rights, but not rights to participate in profits and distributions of the VCC. And these shares are typically held by the managers of the VCC. And another class of participating shares, like what you would do with a typical Cayman entity, which confers rights to participate in profits and distributions, but only certain limited voting rights. And these are held by investors. Next slide. Okay, with the VCC, there's no need for shareholder approval in order to issue or redeem shares, and the requirement to hold annual general meetings may be waived, subject to certain steps being complied with or being taken as prescribed under the VCC Act. A VCC may redeem shares and pay distributions and dividends out of profits or capital. And in terms of accounting standards, a VCC has the option of keeping its books and records in accordance with the specified accounting standards under the regulations, which include IFRS and US GAAP, and the VCC must be audited in accordance with the chosen accounting standards. And lastly, for those of you who may be concerned with privacy or confidentiality, do note that the register of members of the VCC and the constitution of the VCC will not be made publicly available. Next slide. So in terms of key features and key requirements for incorporation, a VCC will need to have a qualifying fund manager. As it stands, qualifying fund manager includes a holder of a capital market services license for fund management, a registered fund management company, or an entity which is exempt from licensing or registration, but which is nonetheless regulated by the MAS, such as banks licensed under the Banking Act or companies licensed under the Insurance Act. Managers relying on the immovable assets licensing exemption will not qualify. The same applies to single family offices, although we understand that the MAS may extend the scope to include SFOs in the future, but subject to certain additional conditions and safeguards. In order to, so VCC will need to have a minimum of at least one director, and at least one director of the VCC must be ordinarily resident in Singapore. and at least one of the directors must also be from the manager, i.e. a director of the manager or a qualified representative of the manager. That includes your appointed representative. Directors of a VCC must also be fit and proper persons as prescribed under the regulations. And you will also need a constitution which is prepared in accordance with the requirements of the VCC Act in order to incorporate the VCC. And the constitution must comply with the requirements of the VCC Act, as I mentioned, and a version of a form of model constitution is available from the Singapore Academy of Law's website. In terms of auditor and secretary, you should note that you will need to appoint an auditor within 3 months of incorporation, and also a company secretary within 6 months of incorporation. Next slide here. Okay. In terms of practical considerations for launch, I will highlight just 3 points here based on our experience. Like any other fund launches, there's always a need as a first step to carefully consider the suitability of the vehicle for your needs. The structure of the fund is often driven by a combination of factors. You will need to consider, for example, costs, managers' needs, legal, and even tax, especially tax, including the availability of the fund tax incentive schemes, for example, under 13R and 13X of the Income Tax Act, and even access to the ability of the vehicle to access double taxation treaties. Investor familiarity may even come into play as part of your consideration. So the VCC in most scenarios should be a good and viable option, especially for Singapore managers, given its flexibility. Managers will need to work closely with various advisors and various service providers to design a structure that is optimal for their needs. The earlier the structure is finalized, the earlier we as legal advisors can commence work in preparing the fund documentation with the support of other service providers. And this brings me to the next point, which is timing. Timing is always a key consideration for managers. In general, the overall time frame for a new launch of a VCC should be comparable to a typical Cayman fund launch, just in terms of the routine incorporation process. From our experience in the past, an application for name reservation, incorporation, and registration of a sub-fund in the case of an umbrella VCC may take up to 14 days each in the past, but more recently we noted from APRA's registration portal that that has been updated to show that each of those steps may now take 3 working days, which is good news for everyone, because this was a concern for some managers that we were working with in the past. Of course, this is the case unless the application is required to be referred to another government agency for review or approval, in which case it may take up to 14 or to 60 days. But that said, from our experience, it usually takes approximately 3 months to launch a new fund anyway. So in this timeline takes into account not only the time required to prepare the fund documentation, but other operational work streams like selection of service providers, negotiating and entering into service agreements with such service providers, and even service providers may require time to complete their client onboarding processes as well. In some cases, this may take a couple of weeks to 1 to 2 months. So in terms of timeline for the launch of additional sub-funds under an existing umbrella, that is usually a lot shorter. I would say it typically takes about 1 to 2 months, depending on whether the terms of subsequent sub-funds are similar, and whether you are changing service providers or whether you already have all the service providers lined up for this particular new sub-fund. But please note, in terms of timing, the manager must be licensed or registered before you can incorporate the VCC. But that doesn't mean that as legal counsel we can't commence work. We typically basically do that in parallel. For example, for manager applying for a license, we will assist them in both work streams concurrently. And if you are going for the VCC grant, please note that there's a deadline which runs from the date of receipt of the notice of incorporation. And the application must be made within 3 months from the date of that notice. So that should be taken into account as part of your launch plans.
Yeah, thanks,
So
Benedict. That's a great summary of the practical issues that you face, the things you need to keep in mind of, and also timing is very important when you launch a fund as well. So, thanks for taking us through that. We appreciate it. And then, probably the next major thing to look at in the sort of the fund launches is, once you've sorted out your legal work and identified the process there, is to sort of move over to the tax. And Anuj, who's on the seminar this evening from PwC, Anuj, would you take us through the tax considerations?
Yes, thank you, Martin. Yeah, so how I've structured the slides for tax is basically start with some specific uses of a VCC. This will actually give a better context to what I will then explain in terms of tax incentives. What is interesting to note is that the conversation has now moved from whether to use Singapore or not to rather how do we use Singapore. So there's a significant scale up in the interest and usage of Singapore domiciled funds, and VCC obviously has been one of the reasons for that. Can you take me to the next slide? The next one? Yeah, so if you think of the most basic use, you could actually use the VCC in a master feeder structure. And in this illustration, what we are showing you is you could use the VCC to be the feeder fund. And this choice would be for the very reasons which Benedict mentioned earlier, that it has flexibility in terms of capital. And in case you need investors to come in and out more easily, then you would create a feeder fund, which would be in the form of a VCC. You may continue to use Singapore private company as the master fund. It could be, again, for several reasons. One is you're more certain on the tax treaty claims when you're using a Singapore private company, because it has been a tried and tested rule. Now, that is not to say a VCC cannot make treaty claims. It's just that there could be some fund managers who would be a bit nervous about claiming treaty benefits for a VCC because it's just not been tested before. Whether you can claim a treaty benefit would obviously depend on the specific treaty in question, the country in question. And so Singapore government will indeed issue a tax residency certificate for a VCC. Yeah, next slide. Now, this is another good use of a VCC, if I can phrase it that way, basically to re-domicile existing funds to Singapore. Now, the benefit of re-domiciling really is that you retain the old entity, so you retain the track record, and it's like changing citizenship. You remain the same person, but your passport has changed. So in terms of re-domiciliation, Singapore in the past did allow re-domiciliation of foreign companies to Singapore companies, and you had to satisfy the condition that the foreign company has at least $10 million in assets and $10 million in revenue. For the VCC, what they have done is they've removed these two conditions. So almost literally, as long as the foreign country allows you to re-domicile vehicles outwards, then Singapore VCC is a possibility. And the process is therefore relatively straightforward. In terms of the Singapore market, I believe Singapore already has perhaps 6 to 8 re-domiciled VCCs, they have been re-domiciled from places like Cayman and Mauritius. Next slide. This is another use of VCC, and actually this seems to be quite common, where we see external asset managers, wealth managers, setting up a VCC with several sub-funds. And again, as Ben mentioned, that VCCs allow you to have sub-funds, allowing the wealth manager to basically offer each sub-fund to a particular client. This helps in cost saving as well as operational ease. Next slide. Now, this one is just a bit of variation of the previous slide, where again we see wealth managers who set up VCC with sub-funds, and each sub-fund will cater to a certain strategy. And then you offer it to your investors who are interested in that particular strategy. Next slide. Now, this kind of becomes a similar structure to the first one, which I showed of a master feeder, where the feeder was the VCC. Here you're looking at the master being the VCC. Now, you would have investors sometimes who are familiar with a limited partnership agreement, and therefore getting investors to sign in is easier with the limited partnership being your feeder fund. It could be in the Cayman Islands, it could be in the Singapore, but the VCC will become your investment vehicle. Next slide. Now, this is another private wealth planning tool, where if you have an external asset manager, you could set up a single VCC for a particular client of yours, and this comes with a trust on top. Now, as Ben earlier mentioned, a single family office currently cannot set up its own VCC because you need to be a licensed manager to set up the VCC. So what the external asset managers in this structure are offering is they are licensed, they manage the assets, and you can make use of a VCC, which has several benefits, including confidentiality, flexibility of capital, and so on and so forth. So this is of significant appeal to several family offices who may not be able to get licensed on their own. Next slide. All right, so now coming to the most popular schemes in Singapore, which also apply to the VCC. Next slide. So a very basic structure would look like this. You have a VCC, and then you have a fund management company, and between the two, there is an investment management agreement. What essentially we do is we go for a 13R or a 13X tax incentive for the VCC. And the aim is that as long as you're deriving what we call specified income from designated investments, the VCC is exempt on that portion of income. After that, you just pay out a dividend to your investors tax-free. So the aim of a VCC is broadly to give you the flexibility, and in the 13X and 13R, they'll give you the tax exemption. Next slide. So this is coming towards the end of my slide deck. If you look at the conditions of 13R and X, and I won't go into the details of each line, but I will give you a broad summary of what 13R and X have. Basically, both of them give the exemption, as I mentioned, on specified income from designated investments. It is only granted upon specific application to the MAS, and the MAS has to approve it. The application process, the approval process takes about 3 months for the first approval. We have clients who have done multiple vehicles and multiple 13RX applications, and the MAS approvals for the second and third is always faster. In terms of 13R, there is a requirement which is important to note. There is a shareholding test. So the investors in a 13R fund will be split into good investors and bad investors. And the bad investors have to pay a penalty. So when you structure a fund, when you appoint your advisors, just remember that you go through the categories of good and bad investors and ensure that all your investors are good investors. Then we come to 13X. 13X is basically without any shareholding test. Instead, what they have is a 50 million fund size test and a 3 investment professional test in the fund management company. Other than that, both the schemes are broadly the same. One point to note is that the 13X scheme does apply to foreign companies, and it does apply to more than just a Singapore VCC or a Singapore corporate, or for that matter, any corporate. It can apply to trusts and limited partnerships. So our observation is that the large fund managers with more complex structures tend to go for a 13X. Next slide.
Yeah, thanks, Anush. We're probably coming up to close of maybe another 1 more minute or so.
Sure, yeah. So I will not cover the grant scheme. Maybe go to the next slide. Yeah, so I guess in terms of the key takeaways, you can go to the next slide. Yeah. Basically, a VCC is a good thing. We think that in the near future, the Singapore unit trust industry will actually be replaced with the Singapore VCC because it offers the flexibility of a unit trust, except in a corporate form, which can potentially offer you treaty benefits. And of course, not everything works for everyone. So you have to definitely deliberate whether you want a VCC or not. We have instances, as I mentioned in one of my slides, that some clients prefer a private company under a VCC because you have more certainty on the treaties, at least till now. Yeah. So Martin, with that, I'll hand it back to you. Thank you.
Yep. Thank you very much, Anush. Yeah. Thank you for putting that together. I mean, just for the attendees, the session is being recorded and the slides will be available. Do feel free to ask any questions at the end. We'll have 15 minutes or so of questions, so use the chat box on the screen if you wish to ask any questions. So, gone through legal, we got through tax considerations. Next, another part of the integral piece of the ecosystem is the fund administrators. And we've got Woon Teng from Ascent who will take us through that important piece. So Woon Teng, maybe over to you.
Thank you. So probably the next slide, please. Yeah, thanks. Okay, so before we touch on how administrators are involved from the start to the launch of a VCC, so I'll just cover some of the scope the fund administrator typically provides to gain a better understanding on how the fund administrator actually come into the picture during the start of the VCC. So in terms of fund accounting, the administrators performs the computation of the net asset value of the fund. And also in this way, fund administrator will determine the net asset value per share. And then the administrator, of course, will help you maintain your accounting records. And for the transfer agency portion, administrator will maintain the register of members, help with the issue and allotment of the shares, transfer and also redemptions of the shares. Administrator can also perform the customer's due diligence. This can be outsourced to the administrator, and administrator will communicate with the investors and then providing periodic reports. When we look at the regulatory compliance, so VCC will have to comply with the AML-CFT laws and regulations. So most of the administrator will have the relevant procedures and resources in place to meet such regulatory requirements. Of course, they also have the general knowledge of relevant accounting standards to apply when it comes to your net asset valuation, such as your Singapore Financial Reporting Standards, your international financial reporting standards, as well as the US GAAP. So these are the three that we commonly see. And when we look at the tax reporting services that the administrator provide, this covers typically the US FATCA reporting obligations, your crsl reporting obligations, as well as they can help you compute your GST remission amounts. Okay, so this is why it's always important to engage a fund administrator from the start and not only when at the launch of the fund. Next slide, please. Okay, so how administrator actually helped to translate that part of the operation into the fund documents. So first, we actually help to look at the constitutions for the consistency of terms, and then we work with the fund managers as well as the respective counterparties in the structuring of the funds and the offering terms. So the offering terms does includes like the subscription terms, your redemption terms, when the documentation and money should be received, because this actually affects your cash flow as well as your AML CFT aspects. And in terms of structurings, there are a few considerations over there. So what I list here under the structuring is that you might need to consider whether it's going to be open-ended, closed-ended, whether you need a master feeder structure to segregate the taxable and tax-exempt capital, whether you will have multiple share classes to offer different terms within the same fund, or whether you actually need a side pocket because of illiquidity in certain assets. Okay. So moving on to distributions, we also help you to work out, how the fund can actually pay out the dividends. And in a closed-ended fund structure, what type of distribution waterfall to apply, whether is it like American waterfall or European waterfall. And we look at the manager fees. So to consider things like what's the basis for the calculation of the management fee, what's the frequency of the payment that will be, and for like performance fee, what type of method to adopt, whether to apply the multi-series or equalization. And then moving on to where we come to the net asset value calculations. Then to consider also what's the valuation policy, what is the pricing policy over here, and then incorporate others into the memorandum. Of course, the fund will also have to comply with the relevant FATCA CRS, and that's where we also ensure the appropriate wordings are included in the memorandum, and then prepare the FATCA CRS self-certification form to be included in the subscription agreement for the investors to complete. And in terms of the subscription agreement, we actually work with your legal to actually ensure the completeness of the form, and also fund managers on the CDD documentation that's been required. Okay. Next, please. Okay, so some of the other considerations that you might have, maybe you might be redomicilating your fund from another jurisdictions, like from Cayman. Then you can, fund administrators will be able to work with you in the transitions of the assets, moving the investors from the prior fund into the current VCC. Okay, and when we look at the GIN application, the administrator will typically be able to help you apply for a GIN with the IRS of US. You will need this to actually comply with FATCA, and because of this, without the GIN, this will actually affect the account opening with the banks, custody, and brokerage firms. So administrator will also be able to help you complete your CRS registration with IRAS, and then also further when the fund is launched, and then to complete the CRS reporting obligations. And then administrators will usually also help you with the bank account opening matters with the different banks, and also you can apply for the ISIN and also list the funds on Bloomberg for track record purpose. Yeah.
Thanks, Wen-Tang. That's very useful. Look, there'll be a Q&A session at the end as well. So if anyone has any questions on the administration piece, then please go ahead. So, once you've engaged your administrator, then on the trading activity, obviously you're going to have a prime broker involved. And Guillaume, one of the most important pieces is to have your trading account set up. And I know IB have been a huge supporter of VCC, and I've been involved in its setup. So yeah, if you could take us through the key considerations from your side, from the prime brokerage on the VCC.
Yeah, absolutely. Thank you, Martin. So Guillaume here, indeed, from Interactive Brokers Singapore. We opened the operations here in Singapore back in July 2020, and As of today, we have over 30 VCCs live and about 10 in process of opening account with us. So indeed, I mean, as was mentioned by the other speakers and panelists, the VCC, the Variable Capital Company, has been a great way of for new funds between 1 million to 25 million US dollar. That's what we noticed, to start business in a very difficult time, where operational aspect like getting a principal place of business, for instance, has been quite challenging, right? So the purpose of my presentation today is to go through some tips and pitfalls I have experienced firsthand with my customers, hoping to generate a channel of communication with anyone having thought of setting up a VCC from a prime broker perspective. So one of the first things that comes into the picture when we start a discussion with a customer is obviously the account structure. And so this is just a slide to describe the overall structure, where indeed you have the fund manager that needs to be licensed locally and the sub fund. One thing which is kind of like a common questions from the customer is like, do I need to open a separate account for the VCC umbrella? Indeed, like VCC comes in two shapes mainly, like the standalone structure and the umbrella structure. So the answer is no, you don't need to have a separate account with the VCC umbrella with IB. The way we work is like, first thing first, we onboard the fund manager, who is actually the master feeder, who has like the master account, and have the IMA or the limited power of attorney for trading rights into the sub fund. And when you onboard the sub fund itself, this is where you can declare as part of the ownership or the ownership entity as the VCC umbrella. So there is no requirement to create an account. This entity is recorded as the entity owner of the VCC sub fund. That's the first point. It's quite interesting also to notice that for us, even though it's still just a couple of dozens of VCC that we have a vast majority under the umbrella structure, and the standalone structure is quite the minority. The other point, which is also key when you approach your prime broker, is obviously the custody. And there is often the question from the customer is like, do I need a custodian located in Singapore or based in Singapore or licensed in Singapore? The answer is no. The VCC has some, of course, specific requirements for the custody for mutual funds and hedge funds, but actually you can appoint a foreign custodian. So the VCC must maintain its assets with a prescribed entity. And the definition actually includes a foreign custodian that is licensed, registered, or authorized to conduct banking business or to act as a custodian in the country or territory where the account is maintained. So based on that, we help providing the relevant information for the VCC, such as the custodian details. So here you have the details on the slide, the description itself. So we provide pro forma disclosure of the IBLLC for the offering memorandum or the PPM, and we provide also some other documentation that can be useful for the registration of the VCC, such as like third-party custody network document that list all the custodian counterparties for due diligence. Last point on the slide, like it's interesting to note a bit the origins. So it was like earlier mentioned that just a couple of redomiciliations so far. On our side, we see quite the majority actually of funds that are redomiciliated from BVI and especially the Caymans, actually, more than the new funds. But I guess maybe with more numbers, this will kind of like balance. In any case, it's really a good point for Singapore, because we see like the attractivity of Singapore as a hub to increase among the fund. The third, that would be it for me actually. Thank you, Martin.
Yeah, thank you, Guillaume. That's very interesting. I think the custody question is one that comes up a lot, and I'm glad you confirmed that. There's a little bit of confusion as about the custodian and where they should be. So thank you for pointing out that. So then, you know, over to sort of our last speaker, Steve Noble from Swiss Asia. Steve, as an investment manager, And you know, in Singapore, you've been here for a very long time. You see a lot of the changes in Singapore over the last number of years. Interested to hear your perspective about VCC, you know, your thoughts on it and how Swiss Asia would utilize it. So Steve, over to you.
Thanks, Martin. Yeah, so I think, you know, it's very interesting to see that, you know, it's been a successful launch. But so we're the guys that actually would put everything together for you. So as you know, we've spoken about, you know, legal counsel, tax, etc. So we, as the investment manager, will put together all of that ecosystem and make sure that, you know, it basically works at the end. So, you know, as we said, no, as the investment manager, that's the starting point. And, you know, you got the lawyers, which are in the ecosystem, the administrator and corporate sec, the tax advisor, then you have the auditor. And then we always, you know, if you're working with a liquid strategy, then, you know, you need a PMS and an OMS to trade and so on. And then you need to put together the board for the corporate governance, and then, of course, the broker, prime broker, or custodian. Again, depending on the strategy that you're trying to execute, right? So if we look at all that, we've talked about most of these, the other panelists, but then let's maybe go to the next slide, and then I can take you through sorry, that was the one I was on. So let me take you through, like I said, the next one, so the fund launch process. All right, good. So basically it's a long road. It's to actually reach the fund launch. So basically you get the idea, you have some capital and you say, okay, I want to set up a fund. So that's the starting point. Then of course you need, like we said, the investment manager. So the investment manager in Singapore, which provides the licensing and the whole regulatory framework. Okay. Then you'll need to appoint a legal counsel, which will be drafting the constitution and the memorandum, so the PPM. These are the offering documents, along with subscription documents and all of the rest of the documentation you need for investors to be able to invest into the fund. And then, of course, you'd need the tax advisor. You appoint the tax advisor, which will give you tax advice based on your strategy, and tax advisor and legal counsel will work closely together to be able to put, let's say, to make it as tax efficient as possible, depending on your needs, depending on what you're investing in, depends on how you want to actually structure the performance fees, etc. And how you want to hold the management shares. So I think that all of these items are really key at that point of drafting the documentation. And then at the same time, of course, you appoint your auditor, because that goes into the PPM as well, right? So then your tax advisor during that period will also be preparing the tax scheme submission with MAS. So that's the 13R or 13X, depending on the size of your fund. So then, of course, you need to appoint your corporate sec. Okay, the corporate sec or the corporate secretary will help you to formally appoint your directors, to incorporate the company and do the ACRA filing, and will help you put together all the corporate governance of the fund. Meaning, you know, I'm appointing directors, and hence my board of directors will be the ones responsible for the corporate governance of the fund. And then comes the fund administrator. Fund administrator will first and foremost help to review all the fund documents and make sure that, you know, their accounting, all the accounting policies and the methodologies are in line and that they can actually do it. So they typically will speak with the fund manager and the investment manager as well to make sure that everybody's aligned in the methodology of, you know, valuation, calculations, etc. Okay, treatments of performance fees, management fees, and so on and so forth. Okay, and then that's, once it's incorporated and you receive, your certificate of incorporation, basically the ACRA files, that's when you can really start opening your bank accounts and your brokerage accounts. That's when you have all the formal documentation that allows you to actually proceed with that, right? And then the tax advisor will, of course, at that point in time, help you, help the investment manager as well do the filing of the tax scheme with MAS. So at that point, you're practically nearly ready to go. So all you need to do is, if you're trading a liquid strategy, then you should integrate your technology with your broker, your prime broker, and your custodian. All right, so your portfolio management system and your execution systems, etc. So in this case, for example, IB would, is the actual execution and custodian and broker, etc. all in one. So then if you're using an in-house portfolio management system, then you just need to link those two up, which is pretty straightforward. And then the investment manager will put together all of the operational processes and document them, so that that goes into the funds file in terms of the corporate governance, and the operational setup is actually done by the operations team, the middle and back office procedures, daily reconciliations or whatever, and ensure that there's service level agreements that are clearly understood between the operations team and the portfolio manager or the fund manager. And then your fund is basically ready to launch. So that's at that point when you can start accepting subscriptions from your investors, which of course need to go through the AML and the KYC, which is done by the compliance, your compliance team. Okay, so that's basically the whole process. It is a I wouldn't say it's a short process. It's a lengthy and procedural process, on the contrary. But it can, by our experience, it typically would be it would take about 4 months from start to end, depending on how fast ACRA approves it. But typically lately it's been about 2-3 weeks, so it's actually been pretty good. And then, yeah, I think that's basically it. So if we go to the next slide. So if everything is followed through and you're doing everything properly and you've got the right service providers in place, your fund will be, you'll have a successful launch. That's, and then from there onwards, that's it.
Yeah, that's the whole idea, Steve.
Yep.
Is to get it up the launch stage.
Correct.
I want an opportunity to do some questions, Steve. If you've got a couple of more slides, if not, there's more questions for you. There's more questions for you later, which are right up your alley. So
that's right. Okay.
Yeah, look, I think thank you to everyone for the presentations. Look, there's a lot of questions coming through, and I've kind of grouped them into a few different categories. And there's one for everybody really, and we have about 12 minutes left, so we can get through some Q&A. So one question has come through maybe for Benedict, and Benedict, around the qualifying manager, and what does that mean? Do they have to be regulated, incorporated in Singapore? There was a question came in about if I'm regulated in Europe under AFM, do I qualify? So maybe take a minute, 2 minutes or so to take us through what that manager needs to be, and can overseas managers qualify?
Yeah, thanks, Martin. So as it stands, overseas managers would not qualify. Qualifying managers essentially mean, as I mentioned earlier, license holders for the regulated activity of fund management in Singapore, or what we alternatively registered fund management companies here, or if not registered fund management companies, it would be, for example, entities exempt from the licensing and registration requirements in Singapore, which is regulated by the MAS under the Banking or Insurance Act. So as it stands, I don't think it includes overseas managers.
Yeah, I think yes, it has to be qualified manager in Singapore. Certain functions can be delegated back to a regulated manager in that AFM, but overall responsibility, compliance, risk management sits with the Singapore manager. So I guess,
that's correct.
yeah, so I guess the short answer is no, you can't, as an overseas manager, qualify. You have to have a resident and then delegate back as well. So thank you for that, Benedict. Other questions that came in, Anuj, was around redomiciliation. How many have we seen? I think you mentioned in your earlier presentation was like 6 or 8 redoms. A question was, around the tax treatment of a redom. We had one question on, what does that actually mean? I think stamp duty came up in one of the questions as well. So a little bit of redoms and some tax considerations. I know you touched on it earlier, but if you could take us a little bit through that.
Sure, thanks, Martin. So before I answer your question, I just want to add one line to the previous question and the comments made. You can delegate certain duties to an offshore manager, and the main manager will be the Singapore qualifying manager. But be careful of how much and what you delegate, because under the tax incentive schemes, you are still required to carry on the fund management activities in Singapore and manage the fund in Singapore. So of course, that does not mean you do 100% work here, but some consideration has to be given into what gets delegated and what does not. Yeah. All right. Yeah. On the redomiciliation, so there are a few things to note. The first thing is, which tax incentive would you go for? Now, the sequencing and the timing becomes a bit of an issue, and therefore we always ask our clients who are redomiciling offshore funds to go for 13X. Okay, and the plan is to apply for 13X whilst the offshore fund is still in that offshore location, and it moves to Singapore under that same 13X. If you do plan to not go for 13X, then you can only do the 13R application after the redomiciliation, because 13R only applies to Singapore companies. But then you have to pay a lot of attention and make sure you're engaging with the MAS at the right time, because the 13R should be applicable the same day as the redomiciliation happens, and the MAS has been very constructive and supportive. They do give you the 13R effective the date of redomiciliation, but there are some actions you as a fund manager need to make in order to achieve that as well. So in summary, we recommend 13X. If you have the 3 investment professionals and 50 million, you can do 13R, but there's a little more effort and involvement required. You asked Martin about stamp duty. So yeah, I mean, stamp duty could be on a few spheres, but I'm guessing the question is around your offshore vehicles investments and whether changing to a Singapore vehicle will attract stamp duty. Now, this will have to be confirmed from the investee country. We haven't heard of this being a big issue, so I cannot give an answer whether stamp duty can apply or not, but at least in our conversations with clients, we have not heard this to be a deal breaker. But you have to consider it, yes.
Yeah, no, thank you for that. We have about 6 minutes left, and we'll get through a few more questions as well. Maybe over to Woon Teng. There's some sort of structural sort of operational type questions as well regarding the VCC and sub funds. Question is, does the fund admin need to be the same fund admin for all the sub funds? That's the first question.
The fund admin does not need to be the same fund admin across all the sub funds, but typically it will be good to have the same fund admin across, because the same provider for the same VCC. For the VCC will be easier for the fund manager to actually manage a correspondence, and also when it comes to the audit, things will facilitate more smoothly.
Okay, so it is allowed, but practically and maybe commercially as well, it might be more expensive to run multiple admins. So practically, no, but it is allowed under the Act, I guess is what you're saying. There's a question on the sub-funds. Do all sub-funds need to be audited?
Audit this. So yes, all the sub-funds will require audit. So and then they will have the same year end.
Yeah, okay. There was a couple of questions on that. Steve, maybe over to yourself. Some questions on, single VCC versus a VCC with sub-funds, considerations that would need to be taken in. Obviously, I guess strategy is one, but why would you launch a new VCC every time versus maybe opt for something with sub-funds underneath? Any thoughts on that?
Yeah, I think that there's quite a few considerations that you need to look at, but without getting into too many technicalities, I think the major concern of setting up sub funds with different clients and different, I'd say, a different set of strategies and different portfolio managers that have nothing to do with each other. It's a bit complicated because the consolidated financial statements need to be done at the VCC level, and hence have a view on the assets of each and every one of the sub funds. So investors in sub fund A will have a view of the assets of the sub fund B, etc. So that is an issue, and also there's the problematic is also the control. A lot of times the portfolio managers or the fund managers want to have a certain amount of control over the directors, the board, the corporate governance, and in this case, if you have an umbrella that's held by a third party, then the board is unique to the whole, or to all of the sub funds, etc. So may create different tensions, and also service providers typically, even though you could theoretically appoint different service providers per sub fund, you might not want to. So yeah, I think okay. It's very standardized across the board, right?
Yeah, thank you, Steve. Maybe over to Guillaume. Guillaume, some questions come in about brokerage. What are the main sort of hurdles or challenges you're seeing with VCC on the brokerage side? Some lessons learned in the last 12 months. Anything? That was one question that came in.
Sure, absolutely. So I think like one of the main challenges is actually due to the popularity of the VCC and the number of funds that are working with us for redomiciliation. Indeed, the main challenge for us is like really the redomiciliation of existing fund from offshore location into onshore Singapore, because the regulatory framework does not allow to flag this type of position transfer, for instance, as internal, even though the UBO, the ultimate beneficiary owner, and the fund manager do not change, right? So the position transfer is flagged as manual transfer, and it requires approval for each class of assets and stock custody environments. That's why I actually advise my client to kind of plan a bit some liquidation for products that are difficult to transfer, like options and futures, and to try to focus on DRS for stocks only, and to factor maybe like 5 to 7 weeks for this type of migration of position between a different jurisdiction. Hopefully, I hope we will come up with a more automation in this area, although it's a bit of a challenge, using a bit more like AI compliance to facilitate this, and it would be beneficial not only for the VCC but also for other cases. One of the other pitfalls, for instance, or like tips is like to think about like the fact that even though the umbrella and the sub-fund are quite related, for instance, if you need to trade European products, you need a LEI at the VCC sub-fund level. So those are the things that we advise our customers, and obviously we can arrange a LEI registration online with the IB application. And other things are more due to like the market access, like to access to futures in Europe. Also, you need a certain amount of AUM, at least $10 million to trade FTSE futures, for instance. So those are like those bits and pieces that are important to keep in mind when you onboard the VCCs, and that's the challenges we've seen in this past 12 months.
Okay, thank you, Guillaume. Always good to know the challenges. We hear about all the good stuff, but sometimes nice to hear about some of the challenges as well. Look, we've come up to the hour mark. There are some questions which we haven't been able to answer. We will reach out to those people separately. If anyone has any questions, feel free to contact the various service providers here. There will be a recording of the session, and the slides will be available, so you can listen back or listen to certain sections again. So I guess, Guillaume, I will pass it back over to you to maybe close out the session.
Yes, thank you very much all. And as mentioned, like this presentation will be available in your email box in a couple of hours. The recorded version will be also available on our website. And of course, if you have any specific questions or the questions were not replied, we had a lot of questions actually today indeed. Please, you have the contact details of all the panelists, so feel free to reach out to them directly. And thank you very much again for attending today. Goodbye.